Hello investors and traders, today I'll speak about Verizon Stock. I will check the technical and fundamental parameters for Verizon company. So I made a quiz on my channel with the most wanted stock for you, and it was Verizon. So today I would like to speak about this company, about this stock. So look, Verizon, it's a telecommunication services company. Its market cap is 146 billion bucks, and that why I'm considering this stock, because of the dividend. I remind you that I am a dividend investor, and this company offer you a dividend yield more than 7%. It's more the US Treasury bond, it more than the deposit. So of course 7% of dividend yields, it's very juicy. But it sometimes it can be very dangerously. So if we look at the chart of this company, actually last 13 years it traded in the range between 60 bucks to 35 bucks. Now it traded at a lower border of this range, and also it can be considered as a nice level to buy the stock. Another point, it's the technical analysis, the momentum indicator RSI. Now it's less than 30 on the monthly time frame. It's telling us that the stock already oversold. So also it's can be a nice signal why we can consider this stock for buying. Let's have a look on the fundamental parameters of this company. So as I told you previously, dividend yield is 7.4%. This company has a lot of employees, more than 100 kilo, and of course this company engaged in the provision of communications, information, and entertainment products and services. Actually, it's very similar to AT&T. They work in the same area, and I remind you that AT&T company, AT&T stock, I sold about a few months ago. After the quarterly report, I decided to sell this company. But Verizon, as for me, looks more healthy. It looks much better as for now. Look, the valuation, the PE ratio is less than 7. The average S&P 500 PE ratio, price per earning, is 15, so it's cheap. And the PS, price per revenue, only 1, so it's very cheap company for now. The performance, the revenue of this company is very stable. Also the marginality, look, the net income margin is 16%, gross profit more than 40%, so nice marginality, especially for this sector. Most of the revenue breakdown, we can see that most of each revenue the company earned from consumer services, and 100% the company earned in the US. Let's have a look on the dividends of this company. So look, at least last 5 years the company increased its dividend payments. Its payout ratio only 50%. It's half. It's mean that half of net income the company usually pays as dividends. So I see here a nice room even to increase its dividend payments. Also, we can see that the dividend increase track record for Verizon is 18 years, and annualized 3-year dividend growth rate is more than 2%. So actually a nice dividend company. I told you previously that it can be dangerous, such companies with high yield, with high dividend yields. Look, the debt to EBITDA ratio is more than 3. It's not so cool. It's a little bit high, but general, look, the interest coverage is more than 7. So I remind you, interest coverage, it's the operational income of the company divided by interest payments. So usually if it's higher than 5, it's okay. Here we see a nice figure of 7. It tells me that for now still it can be safe. Also we can see here the projections, so the revenue is expected to be stable for the next years, the EBITDA also stable, and of course the dividend per share also for the next 3 years expected for this company, for Verizon to continue to grow. Also, we may see that now 27 analysts giving a stock rating on this company for the last past 3 months, and most of them 19 analysts now holding this company. Of course, receive such nice dividends, juicy dividends, why not to hold this company for now? And the price targets, the current 35 bucks, the average is more than 40 bucks, so actually the upside potential is about 20%. Also, as I told you previously, the forecast and the expectations is quite high for this company. The EPS, earning per share, expected to grow next week, and the revenue also expected to be very stable for this company. So generally speaking, my opinion about Verizon, now this company oversold. It's traded in the same levels as 2011. Nice juicy dividends, and the financial position in my mind now it's not safe even, but generally it's okay. I'm not see any red flags in my mind. It's normal. I myself continue to hold this company in my portfolio. I would like to receive these dividend payments, and of course this company I continue to live in my portfolio. So generally speaking, as for me, my opinion that Verizon, it doesn't such dangerous as AT&T. I show you that their free cash flow, their interest payments are really very high for now. So in my mind, I see Verizon a much better choice as for now. So if you want me to analyze any other companies to check their parameters, technical, fundamental, check parameters, so you can write it down in the comments. I will of course make it for you, and don't forget to press the like button, and see you on the next time. Bye.